You ever look at a financial chart and just feel completely lost? All those squiggly lines, the numbers, it can feel like way too much.
Oh, definitely. It's overwhelming sometimes. You just want a clear signal, right? Something quick.
Exactly. And that's where candlestick charts really come in handy. There's such a great visual shortcut. So today we're doing a deep dive to really unpack them.
That's the plan. We want to go beyond just, seeing green and red shapes. We want to understand what they're actually telling us about what the market's doing.
Yeah, and we found a really solid starting point for this, a YouTube video from Wise Trade. It's called How to Read Candlestick Charts Fast, Beginner's Guide.
Right. It gives a nice, clean foundation. Very beginner-friendly.
So our mission today for this deep dive is basically to pull out the essential stuff from that guide and, build on it a bit.
We want you to walk away really grasping what each bit of a candlestick means, what it shows about buyers and sellers pushing and pulling. You'll get a much clearer view of market action.
Okay, let's start with the absolute basics then. The single candlestick. Usually green or red. What do those colors tell us straight off?
Super simple. Green means the price went up during whatever time period that candle represents.
Okay.
And red means the price went down during that same period. Bullish versus bearish, basically.
Green for go, red for stop. Well, red for drop anyway. Makes sense. Now they have that blocky bit in the middle and then the lines sticking out.
Yep. The blocky part is the real body, or just the body. That's key.
Okay, the body, what's it showing?
For a green candle, the bottom of that body is where the price opened, and the top is where it closed for that period.
Bottom open, top close for green.
Right. And for a red candle, it's flipped. The top of the body is the open price, and the bottom is the close price.
Okay, got it. So the body shows the open to close journey. What about those lines then, the thin parts?
Those are the wicks. You might also hear them called shadows or tails, same thing.
Wicks, shadows, tails. Okay.
They show the absolute highest and lowest prices the asset hit during that period. The top of the upper wick is the high, the bottom of the lower wick is the low.
Right, the extremes. Let's try an example. Say we're looking at a daily chart. One candle is one day. It's green. The body goes from, say, $150 up to $155.
Okay.
And the wicks. The bottom one goes down to $148. The top one reaches $157. Walk us through that day.
Sure. So on that day, trading opened at $150.
Yep.
Price went up, closed at $155. That's why it's green.
Right.
But during the day, it dipped as low as $148. That's the lower wick. And it peaked up at $157.
Yeah.
That's the upper wick.
Right.
And it settled back to close at $155.
Okay, that paints a clear picture. Bullish day overall. Now flip it. A red candle. Let's say the body's from $130 down to $125.
Okay, so open is $130, close is $125.
Yep. And the wicks, maybe a low of $124 and a high of $130.90.
All right, so it opened at $130. Sellers pushed it down, and it closed lower at $125. That's the red body.
Makes sense.
During that day, it managed to poke up briefly to $130.90. That's the upper wick's high. And it dropped down to $124 at its lowest point, the lower wick's low, before closing at $125. A bearish day.
Perfect. So we've dissected one candle, but charts are full of them. What controls how much time each candle represents?
That's the time frame. Super important concept. Each candle shows the open, high, low, close for a specific duration.
Like what the Wise Trade video showed. Daily, weekly.
Exactly. You'll see things like 1D for daily charts, 1W for weekly, 1H for hourly. You can go down to minutes, even seconds, or up to months.
So on a daily chart, one candle went one day's action. Open, high, low, close for that day.
Precisely. And if you switch that same chart to hourly, now each candle is just 1 hour of trading. Open, high, low, close for that hour.
Does how you read the candle change?
Nope, not at all. That's the beauty of it. A green candle means price went up in that hour or that day or that week. Body and wicks mean the same thing.
Okay.
The time frame just changes the time scale of the story each candle is telling you.
Yeah.
The zoom level, if you like.
Got it. Now, the video mentioned the size of the body is important, not just the color. What does a big body tell us versus a small one?
Yeah, body size is a big clue about momentum. A large body, a long green one or a long red one, suggests strong momentum. Meaning the price moved a lot between the open and the close. Buyers, for green, or sellers, for red, were really in control and pushed things decisively during that period. Suggests strength in that direction.
Okay, strong conviction. So a small body.
Weaker momentum. Price didn't really go far from where it started. It suggests, less conviction, maybe some back and forth, without a clear winner for that period.
And then there's that special case, the doji, right? Looks kind of different.
The doji, yeah.
Yeah.
That's when the body is tiny, like almost just a line. Open and close prices are very, very close, maybe even the same.
What's the story there?
Indecision. Big time. Like the video says, price might have swung up, swung down, but ultimately ended up right back near where it started.
Was stalemate.
Exactly. Buyers and sellers fought, but neither could gain the upper hand by the end of that period. A doji, especially after a strong move, can be a heads up that things might be about to change, like the momentum is fading.
Okay, so these single candles are like little data packets. Open, high, low, close, and a hint of momentum. Why is reading these signals so powerful?
Well, because like the source video emphasizes, they tell a story when you put them together. Each one is a snapshot of that buyer versus seller battle.
The tug of war.
Precisely. And the sequence, the patterns these candles make over time, that gives you real insight into the overall pressure, the price action, as traders call it.
So it's not just random bars, it's a narrative unfolding, showing who's winning the battle moment by moment or hour by hour or day by day.
You got it. And by reading that narrative, you can start to see the bigger picture, like trends.
Right, trends. How do candlesticks show us an uptrend?
Well, visually, you'll see more green candles than red, usually. And the overall movement is upwards. The video defines it technically as making higher highs and higher lows.
Higher highs and higher lows. Explain that a bit.
Sure. Each price peak is higher than the last peak, and each pullback or low point is higher than the last low point. It looks like climbing stairs.
Okay.
And fundamentally, it tells you buyers are generally in control. They keep pushing the price to new heights, and when it dips, other buyers step in at a higher level than before.
Makes sense. And the opposite for a downtrend, more red candles.
Yep, more red than green, usually, price heading down. And the definition is lower highs and lower lows.
So each peak is lower than the last peak, and each valley is lower than the last valley, like going downstairs.
Exactly. It suggests sellers are dominant, they're pushing prices to new lows, and any attempt to rally fizzles out at a lower point than the previous rally.
Okay, uptrend, downtrend. What if it's just messy? A mix of red and green, not really going anywhere overall.
That's your sideways or ranging market. A video mentions it having the same highs and same lows, more or less. Price bounces between a ceiling and a floor.
Consolidate.
Yeah, consolidation, indecision, often looks choppy. Neither buyers nor sellers can sustain a move for long.
Spotting these trends is one thing, but knowing when they might change? That seems crucial. The video touched on signals for that.
It did, yeah. It didn't go super deep into specific reversal patterns, but it gave some core ideas for an uptrend potentially ending.
What should we look for?
Watch for the pattern of higher highs and higher lows to break. Maybe price makes a lower low than the previous one, or maybe it fails to make a new high and then makes a lower high. Those are warning signs.
Breaking the staircase pattern.
Exactly. And for a downtrend potentially ending and turning up, you look for the opposite. Does it suddenly make a higher high after a series of lower highs?
Okay.
Or does it fail to make a new low and then forms a higher low? Again, it's about seeing that established downward pattern get disrupted. These are hints the momentum might be shifting.
It's like seeing the first crack in the trend. Let's circle back to momentum. We talked body size. Are there other candlestick clues about momentum strengthening or weakening?
Oh yeah, definitely. The video points out a couple of ways momentum can show it's gaining steam. One is seeing really tight price action within a trend.
Tight price action, meaning?
Like in an uptrend, you see a bunch of green candles, maybe with smaller bodies and short wicks, all clustered together, moving up steadily without big dips. It suggests buyers are firmly in control, there's not much selling pressure fighting back. Smooth sailing for the trend. Same idea in reverse for a downtrend with tight red candles.
So steady, controlled movement equals strong momentum. What's the other sign of increasing momentum?
When the candle bodies start getting bigger in the direction of the trend.
Oh, okay.
So in an uptrend, if your green candles start getting longer and longer, that shows increasing bullish power. Buyers are getting more aggressive each period.
And bigger red candles in a downtrend means sellers are getting stronger.
Exactly. Growing conviction, accelerating move. It makes it harder for the other side to even think about reversing things.
Right. So tight action and growing bodies signal momentum gain. What about momentum loss? How do candles show the trend might be running out of gas?
Well, one sign is the opposite of tight action. You start seeing wide, volatile swings after things were calm.
Like longer wicks and bigger bodies, maybe going both ways?
Yeah. If that steady uptrend suddenly gets choppy, with big candles and long wicks appearing, it suggests the buyer's grip is slipping. sellers for fighting back harder, creating more uncertainty.
Okay, volatility increasing can be a warning. What else?
The opposite of growing bodies, shrinking bodies, even if the candles stay the same color.
So in an uptrend, if the green candles start getting shorter and shorter.
Right, it suggests the buying power is fading. They're not making as much progress each period. Same for shrinking red candles in a downtrend.
Yeah.
Selling pressure is easing off. The energy seems to be draining.
Interesting. And the video also mentioned color changes being significant.
Hugely significant,
Yeah.
especially after a run of the same color. If you're in a downtrend, just red, 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 and then boom, a green candle appears.
What's that tell us?
It often signals a failure to make a new low. Price couldn't push down further in that period. Instead, it closed higher. It means buyers might be stepping in, testing the waters.
A potential sign of a bottom forming.
Could be. And conversely, in a strong uptrend, lots of green, then suddenly a red candle prints. It means price failed to make a new high close for that period. Sellers showed up. It's a warning the uptrend might be stalling. That failure to make a new high or new low is really key.
Wow. Okay, so it's not just noise. These candles, their shapes, their colors, their sequences, they're constantly giving off signals about this underlying battle.
That's exactly it. It's a visual language.
Mhm.
And traders learn to read this language, the patterns, the momentum shifts, to make informed decisions about what might happen next.
Right. Okay, let's do a quick flyby summary. Green up, red down. Body is open close. Wicks are high-low. Each candle is a set time frame.
Yep. Big body, strong momentum. Small body, weak momentum. Doji means indecision, watch out.
And we look for series of candles to spot trends, higher high slows for uptrends, lower high slows for downtrends.
And watch for breaks in those patterns, changes in candle size, increasing volatility, or color changes as signs momentum might be shifting.
Got it. And knowing this, you, our listener, can start to look at these charts not with dread, but with a bit more understanding, right?
Exactly. It gives you a framework, way to cut through some of the noise and see the story the price itself is telling about supply and demand.
So here's something to chew on as we wrap up. We've talked about single candles telling small stories and sequences showing trends. But think bigger picture. How might these smaller stories combine over much longer time frames to form larger, more complex patterns on a chart?
Yeah. What bigger narratives about market direction could those large-scale patterns reveal? It's that next level of analysis, and it all builds from understanding these candlestick basics we covered today.